All right, judging by volume here at the New York Stock Exchange, Wall Street is in wait-and-see mode because of the jobs report, the big non-farms payroll report coming out on Friday. So we bring in for a preview of that report Neil Grossman right now. He's Chief Investment Officer at TKNG Capital, joining us from St. Petersburg, Florida. And he says, Neil, you say private payroll growth is strong and we're set for further gains through the end of the year. What's the headline number going to be, first off, in your opinion?
Well, I'm looking for, Matt, a number on the order of 100,000 jobs. I would have been a little bit higher towards 150, which I think is what both the job trajectories have been indicating, as well as the weekly claims data, which has been consistent with numbers like that. But, you know, there's been a lot of other stuff over the last few weeks which has to give you some pause. You've had the FAA issue out of Washington. You've had Minnesota. You've had the Verizon issue. And although I guess this has got no precedent, you know, Congress actually worked into August, and I'm not really sure how much that's going to detract from the jobs number.
All right, I think you probably would like to see those 535 in the unemployment line. Let's talk about, though, okay, Verizon is a private issue, and actually that shows up on ADP. It didn't show up on ADP. It's going to show up on the NFP.
Yes.
But really the problem is Washington, and I don't mean the 535. I mean federal jobs, also state and local jobs. Take a look. You've got a chart, private payrolls versus public jobs, which is the issue that's kind of holding back the numbers, right?
Well, that's been a big thing for the last year. I mean, if you look at the private sector has really consistently been adding about 1.7 or 1.8 million jobs now on a trailing 12-month basis. And that's been consistently at that level almost since the beginning of the year. The public sector has been taking away jobs, as of the last number, around 600,000+. But that drag is actually going away. And as we move towards the rest of the year, I think the maybe monthly numbers are going to be someplace between, say, 0 and 25,000 a month at worst than a drag. So I think there's a lot of reason to expect that as the year moves on and progresses, that we'll probably add between 1.75 and 2.25 million jobs this year, which is, it's not off the charts like, you know, the high years of the Clinton administration, but it's certainly not a recession. You've also got some other features like the wages have been reasonably good. It's up about 2.3% year on year. The work week has been extending, and although it's not yet at its high, it's increased. And those are very positive factors.
Neil, but we've seen that all of market volatility has certainly taken a toll on consumer confidence and certainly raised eyebrows down in Washington with the Federal Reserve. Even if we add 2 million jobs by the end of this year, could it become sort of a self-realizing prophecy or self-fulfilling prophecy that all this volatility actually does pull us back into a recession?
Well, Lisa, I think that's 100% correct. I think that look, you have a sort of an unstable economy, and people are very, very uncomfortable and insecure. And it's very easy for confidence to be affected negatively. But I think the biggest issue is going to be not the confidence of the consumer, but for that purpose, the confidence of businesses. You've seen, I mean, consumer spending is held up reasonably. And in fact, again, if you look at the numbers, like year to date this year, we've added already 300 to 400,000 jobs more than the same 7 months last year. By the end of September, that's going to be probably 600,000 or 700,000 jobs. You know, that adds income, that adds spending, and that is absorbing some of the negative factors out there that, you know, you don't really think about. Also, oil prices and commodities have fallen a lot. That adds to real income and real consumption as well. But there are a lot of people who are very, very, you know, unsure, and the more that the policy issues permeate, the more risk there is that businesses and business leaders pause in their decision making, and that's where, in part, this can come from.
Do you not think that works itself out, Neil? Because I was talking to a trader earlier who normally is never optimistic about Washington, and he said he thinks Fed policy is going to shake out to a little bit more certainty in the coming months, and that something like the super committee, if that works, that'll be a positive. We could actually start to see Washington working towards more confidence.
Well, Matt, I think Washington, I think that super committee is actually much more important in a sense than the Fed. I think the Fed will do what it wants, but I think, you know, we've discussed this many times. It's not clear what quantitative easing and these other policies have actually done. In fact, you can almost argue, talking about confidence levels, that the Fed, started with QE2 last year at this time, announcing they were going to be thinking about it. It was initiated in November, and what did it do? It basically sent the stock market up early, but the stock market's reacted very negatively as it's come off and as the economy has slowed down. So I think with the Fed, if it's going to do anything, it needs to have in place something which provides a long-term impetus that you don't get these fits and starts of activity. And I'd say the same thing for Washington. I mean, another good example of that was the first-time home buyers. I mean, they've caused people to rush to buy homes, lasted for 3 to 6 months, and then the minute it disappeared, the economy responded negatively and other things were dragged down with it. So you'd be looking for Washington to implement really solid, long-term, stable policies, let the economy sort of work through the distortions and build its own momentum without the artificial, these artificial impetus that go away after a period of time.
All right, Neil, we got to leave it there, but thank you so much for joining us here on Street Smart. That was Neil Grossman of TKNG Capital Partners with a slightly more optimistic outlook for jobs reports coming this Friday. We'll